Matador Secondary Private Equity AG is a Swiss specialist focused on generating value in the secondary private equity market, targeting mature fund stakes and direct investments with disciplined selection and active portfolio management. With its long-term perspective and strong track record, Matador offers institutional investors attractive access to diversified private equity exposure. Today, CFO Alexander Lachman presents the elevator pitch, giving a concise overview of Matador's strategy, business model, and key value drivers. Alexander, the stage is yours.
Thank you for the introduction and welcome to the elevator pitch of Matador Secondary Private Equity. Let us start with a summary before we take a closer look at the USPs. Matador is a listed company in Switzerland and was founded in 2005 by Dr. Florian Dillinger and Dr. Robert Ettlin in Saanen, Switzerland. We invest in secondary private equity. Our shareholders invest subsequently in an asset class with strong returns. Secondary private equity is characterized by an ideal risk-reward combination. The illiquidity of the private equity market is to Matador's advantage. We buy private equity fund shares from only top-tier private equity managers at a discount to NAV from other investors, usually family offices or pension funds. Continuous cash distributions from our fund investments are reinvested and hence enable an ongoing portfolio expansion without outflows. Contrary to a fund setup, the limited company structure shields from possible withdrawals. A strong compounding effect can take place. No bad timing, no emotions are in the way. A promising investment pipeline caters for future growth. The result of our investments is a broadly diversified portfolio across regions, sectors, and styles, with exposure to over 1,000 companies. This leads to steady and low correlated double-digit returns. Our business model is highly scalable and management is largest shareholder of Matador. Our track record dates back to 2005. We achieved a performance of more than 12% per annum, Swiss franc based. As mentioned, management is largest shareholder, followed by renowned entrepreneurs, family offices, and independent asset managers from the DACH region. In the pictures, you see management from left to right, Dr. Florian Dillinger, co-founder, CEO, and CIO, Dr. Robert Ettlin, co-founder and responsible for all legal matters. Maria Anderson and Detlef Makowitz from Makowitz & Partner are our partners of choice in evaluating private equity managers and funds in which we want to invest. Crucial when considering choosing from thousands of general partners and funds. Nothing beats good quality. Why would someone sell a good investment? There are many reasons, but they usually have in common that existing holders need to sell. Reducing the weighting of private equity in the asset allocation, reducing the number of manager relationships, regulatory reasons, tax reasons, or simple need for cash. The transaction volume in secondary private equity has tenfolded in the last decade, but still represents only a fraction of total PE volumes. Matador acquires fund shares that are usually in year 4 to 6, with more than 50% of capital already committed. Matador is a preferred buyer, since the general partners have to approve the transaction. The risk-reward ratio is significantly more attractive in secondary private equity than in traditional private equity. No blind pull risk. We know what we buy. Fund shares can be acquired at a discount to NAV. Bear in mind, quality and strategy take priority at Matador. First distributions can already be expected due to the investments in more mature funds. Last but not least, lower costs involved. Secondary private equity has been highly profitable for over 20 years in every vintage year, with double-digit returns on average and never negative. Our portfolio comprises well-known managers like Ardian, Capital Dynamics, Knightsbridge, RCP, and Stepstone. Focus is on US and Europe. In the last many years, we built the portfolio around mid and small buyout, predominantly in the US. By taking majority stakes in companies, the PE managers can develop, grow, and optimize the underlying companies, thereby creating attractive assets for strategic buyers or PE managers focusing on larger deals. The common buy and build strategy, scaling businesses, works best in the US. Most of the cash we receive doesn't stem from IPOs, but smaller M&A transactions, which are less dependent on business climate and interest rate environments. Low leverage and multiples for smaller companies are setting the foundation for continued M&A activity and hence cash distribution for Matador. However, as we are keen to diversify, Matador also invests in adjacent styles like large buyout and growth, especially in the tech and software space. We have already spoken about regions and styles. The broad sector split also well defines the diversification we offer. Last but not least, it is important to diversify across different vintage years. A larger portion of our portfolio is maturing towards the attractive distribution-rich years of a fund cycle. So what is Matador offering its shareholders? Everyone can invest via Matador in private equity with strong returns. It is a listed company focusing on secondary private equity, which is very stable and more profitable compared to other asset classes. The portfolio is well diversified and the long-term track record speaks for itself. We don't thrive for a quick win or fast double, but for consistent and low-risk returns. Management is larger shareholder, guaranteeing a high alignment of interest with all shareholders. All of this comes at a favorable and lean cost structure, and our setup is highly scalable. Thorough analysis of the PE manager and fund before purchase is the cornerstone for sustainable returns. Our USP in sourcing and selecting. The discount to NAV is the icing on the cake. The cash Matador receives from its investments is reinvested with the compounding taking full effect. Thank you for your interest and listening. Please reach out on ir@matador.ca for any questions.
Thank you, Alexander, for this insightful overview of Matador Secondary Private Equity AG and its unique positioning in the secondary private equity market. Investors who would like to explore the strategy further or discuss specific opportunities are invited to contact the company directly for additional information and engagement.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.